So I don't have much today. We're gonna go over a couple things, and I'm gonna kind of leave the floor open for suggestions. We'll kind of just go with the flow. But all we're gonna do is we're gonna go over the final hour macro and the setups that occurred this week in that last hour of trading, and we're also going to go over do like a deep study on the trade I took during the final hour. I believe that was Friday. Was that yesterday? If I'm not mistaken, we're going to go over that. And we're just going to go with the flow, take questions, and if something pops up, then we'll work on that for a little bit. But this may be a quick one. We'll just flow. So, final hour macro, 3:15 and 3:45. We covered this in last week's webinar. All right. Typically, if I can't find a setup in the morning or in the PM session, then I kind of have that last bullet in the chamber, and I'll find something in the last hour of trading. Okay, it's only a 30-minute window, which is what I like about it. And in my opinion, it's one of the easiest times to trade because you have all the trading behind you. So you can see what liquidity is left in the market. You can see what they did, throughout the entirety of the day, and you have 30 minutes to find a setup targeting liquidity. So it's pretty simple. So we're going to work our way backwards here. This is Friday, I believe. Yep, Friday the 19th. We're going to go all the way to Monday and just look at the setups that occurred. And hopefully you guys can get some insight from this. So right here, okay, if we zoom out a little bit, okay, this is all Friday's trading. Okay, it's pretty obvious who's been making money all day, which is people going short. All right, one second. Which is people going short, okay, trailing their buy stops down, buy stops, buy stops, buy stops. Now we get to that final hour of trading. Okay, buy side liquidity above this high. We run that out before getting to that final hour. Okay, so if you think about it from a retail liquidity standpoint and where they're trailing their stop losses, okay, they're trailing it from this high to this high, yes, but these are relative equal. Okay, so you have to kind of have the lens of a retail trader when it comes to this last hour, but they're seeing something like this. Right, that's what they're seeing, some kind of resistance idea. Okay, these highs just a little too clean. We run that out. So your thought process here as we enter that final hour of trading should be buy side, okay, has already been taken out. Short traders have already been cleaned out. Okay, we ran out that liquidity. So what's left? Sell side. Okay, this rally higher, people are going to chase that. There's going to be sell side liquidity resting underneath this low and resting underneath this low here. Zoom in a little bit. Take this off. Now, you don't get, at least on the 1 minute chart, you don't get a fair value gap entry here, but that may not be your model. If your model is the breaker, or if you're comfortable entering in a bearish breaker, you have this here. We have a high, low, higher high, last down close candle in between your two highs. Remember, we already cleaned out the buy side, so what liquidity is left on the table? Sell side here, sell side, small little short-term low there. The opening price of this candle here is the exact price level of mean threshold of the breaker. So 44.25 is midpoint. Opening price on this candle, 44.25. Okay, once you see that there and we displace, okay, you can have a sell limit at the low of the breaker. Put your stop loss above consequent encroachment of this fair value gap. That would be your short. Targeting sell side, and me personally, I'll be reaching for sell side down here, but we don't get that in time, and we consolidate into the close at 415. All right, but that's just an example of an area you can go short after clearing the buy side using that final hour. Let's look at some more. I already have these marked up. All right, so here, this is actually the trade I took on Friday, which was yesterday, I believe. No, Thursday. Duh, this was Thursday. So if we zoom out, okay, people have been making money going long, sell stops. Now, right before we get to the 315 to 345 window, sell side's taken out. So at this point in time, right here at 315, who is making money and where is the liquidity that's left in the market right now? Well, it can't be sell side because we cleared all the sell side already, right? All this taken out, we dropped down. Okay, everybody who was fortunate enough to catch this move going long with their stop losses beneath this low, this low, this low, okay, all that's taken out on this drop lower. So as we get into that final hour, where's liquidity? Above this high here, above this high here, and then of course above this high. All right, so I wasn't fortunate enough to get in down here because I was editing the trade I took earlier, so I really didn't get to my charts until we're about right here. Clearing out the sell side, okay, I identified, and this trade is on YouTube if you haven't watched it already, but this was the liquidity that was left in the market. All right, working this fair value gap, you can see it offering support, and also down close candles are offering support. So that is signs of bullish order flow. This down close candle, okay, offering support, down close candle, support, down close candle, support. These two consecutive down close candles here being used as support. So that's telling you that order flow is bullish. Bearish order blocks, up close candles are getting ran through. Okay, they're not getting respected. We also have a bearish breaker here that didn't get respected. So that's telling you that there's a shift in market structure. We have a high, low, higher high. Ideally, if you're bearish, you want to see us trade up into that and work lower. Okay, we blast through it. So now, next fair value gap opportunity to go long. Okay, if you missed this entry, if you're comfortable trading bullish order blocks, these two consecutive down close candles, you can buy that. Stop loss underneath the low. Buy side, buy side, buy side. Okay, those could be partials if you have multiple contracts on. I got a lot of questions. How did I know this fair value gap was going to stay open? One second. No, this is a small little detail, but if you notice, this was really our first fair value gap besides this one down here. We kind of just consolidate, slowly making our way up here, slowly making our way up, and then boom, get this large candle here. But notice we also have a small little fair value gap here. So in that trade I took Thursday, okay, in this trade I actually had a buy limit at the high of this fair value gap. My stop loss was just below consequent encroachment. I wanted to see if we drop down into that, but we formed a fair value gap up here. We're trading down into this down close candle, bullish order block. Okay, as this candle opened and started trading up, I was watching that because we went over breakaway gaps last webinar. Okay, basically the fair value gap that forms on top of the breakaway gap, that's the fair value gap you want to use for your entry. Okay, so after seeing that, this candle opens, we rally. I buy right as soon as we're crossing that opening price. Okay, because that's a bullish order block. Ideally, you don't want to see up 20. I'm gonna meet you real quick. What's up, bro? I'm gonna meet you real quick. I think like when people join in, like it automatically unmutes them or whatever. But we're just getting started, so you didn't miss much. So opening price right here. Okay, a lot of people think for order blocks, you have to wait for price to leave it and then come all the way back down. Okay, as soon as we cross that opening price, you could be a buyer there. And I put my stop loss right underneath this low because the logic is this fair value gap is going to stay open. There's no need to come down into this one, and we're in a rush to get buy side up here. All right, buy it there, stop loss underneath the order block, quick scalp targeting the remaining liquidity left in the day. And you can see as soon as we tag that, we retrace back inside the middle of the range. Okay, let's move on. Okay, this is kind of a sloppy example. If you look at the price action, okay, this isn't really clean. Literally just moving sideways. But I wanted to show this just for completeness sake. Sell side here, right? All these lows, we have like this quadruple bottom, just way too smooth, way too clean. Okay, it's pretty obvious to see. Before we get to that final hour, what do? We drop down, clearing all those sell stops. So traders who have their stop losses beneath these lows, they're taken out of the market now. Now, since we know that the final hour attacks remaining liquidity left in the day, this is why, in my opinion, it's one of the easiest times to trade, because all you have to understand is where is the liquidity. Drop down, clearing up all the sell stops. So now that they're taken care of, delete that. What's left in the market? Buy side. Buy side above this high. Buy side above this high here. Now, you don't get that target, okay? Pretty much consolidating, going sideways, but you can see the logic. I have this down close candle, bullish order block. I'm taking mean threshold of that, which is midpoint. Draw it through. Beautiful there. We rally. Okay, fair value gap here. Me personally, I would trust this entry going long. Targeting buy side up here, but you wouldn't have gotten that. It just retraces into the bullish order block, rallies once more, fails to take out this high, and then works lower into the close. So this is a real choppy day. I probably wouldn't even show up to my charts for this, but you can still see the logic. And I don't think I have one for Tuesday. I think Tuesday was choppy. Yeah, this was just consolidation. There's nothing clean in here. Don't want to trade that. And Monday, this was a beautiful example. All right, so if we're looking at it like this, who's been making money all morning? Okay, obviously people going short. They're trailing their buy stops above this high, above these equal highs. This high here, this high here, this high here. Okay, this high gets ran out, but let's say traders don't trail the stop losses here. This high is pretty obvious, and you start to move away. We run that, okay, during the final hour. This is why it's kind of important to have an understanding of liquidity, and this is why I say you have to kind of think like a retail trader. Just imagine yourself if you're in this short, right? If you're in this short anywhere up here and you're holding for something all the way down here, I don't know, doesn't matter. But if you're short, where are you moving your stops? Here, here. Okay, if you didn't move your stop loss here and get stopped out, you're definitely moving your stop above this high as you start to move away. Okay, as price is trading all the way down here, those buy stops from these highs are going to be trailed down right above that high. Well, we get to the final hour macro. Okay, just a couple minutes in, we run that liquidity and get displacement with the fair value gap. So majority of traders who are trailing down their stop losses, they're taken out of the market. Okay, short traders are taken out. Now that we know that, let's clear that off. Who's left in the market? Who's making money now that we knocked out majority of traders going short? Traders who are chasing this move here. Okay, sell side liquidity. That's what's left on the table during this final hour macro. This low here, this low here, this low here. Traders are trailing their stop losses up. Okay, definitely sell side resting beneath this low because people are going to be chasing that move going higher. You get a fair value gap entry here. Okay, and draw it through. Last up close candle is a bearish order block. We work that here, come down once more, break down. Breakaway gap. Preferably, you don't want to see that open. Now, this is why I also have, if you look at my trading plan, it says my entry model most times is I enter with a fair value gap or a volume imbalance. Most people don't see this as an entry. I left it out on purpose. And there's something else I'm going to highlight as well. But let's say you're not comfortable taking this first fair value gap, or let's say you missed it, no problem. You have this right here. That small little volume imbalance right there, that's an entry. Because if we're kind of consolidating here, okay, we're expecting lower prices, we cleared the buy side, we understand that sell side liquidity is left on the table. Okay, we get this fair value gap here, treating that as a breakaway gap. Ideally, you want to see that stay open. So if we're expecting this fair value gap to stay open, where can we enter to go short? The volume imbalance. Right there. This candle opens, trades up, right there, that's a short. And you can feel comfortable putting your stop loss above this candle's high, which creates the breakaway gap. But more specifically, what's this right here? So that's 2 PD arrays to go short. This is a bearish breaker. High, low, higher high. We break lower, breakaway gap, volume imbalance, and then the breaker. Okay, go short either in the volume imbalance, or if you don't see that, if you don't trust volume imbalances, no problem. Just short it at the low of the breaker. You can put your stop loss above the high of the breakaway gap, which is pretty much on top of the bearish breaker. That's a great trade idea. Understanding liquidity, buy side already ran out. Target the sell side here, partial. Leave a contract on for the sell side down here. And you can see once we take out the liquidity, we retrace, and then we consolidate pretty much into the close. Both sides of the market cleaned up in that final hour. Happens all the time. And we already went over this example last week's webinar, but pretty much the same thing. Okay, ran up buy side, these equal highs, we run that out, we traded into like a higher time frame PD array up here. Okay, which liquidity is left on the table. Sell side, everybody chasing this move going higher as we enter that last hour. Breakaway gap here. This is the fair value gap you want to get your entry in. Target the liquidity. All right. I love the final hour macro. Hopefully next week we'll catch some setups in that final hour. In my opinion, it's, like I said, it's the easiest time to trade. You have all of the AM session behind you, all of lunch, all of the PM session behind you. And if you have a decent understanding of liquidity and where those buy stops and sell stops are being trailed to, okay, you can just trade and attack the opposing side. Pretty simple stuff. I see we got some people joined in while I was yapping. Abdil, Phil Kos, Jesus. What's up, guys? That's pretty much it. We already, for the most part, already broke down. What's up, bro? I don't know who that was. Somebody said something.
I was saying good morning.
Oh, good morning. Good morning. Good morning. Yeah, you guys can unmute yourself if you want to speak or ask a question. But let's see. Let me look at my notes real quick. All right, Phil Coast, cool. But yeah, that's pretty much all we got. I didn't get many. Well, technically I didn't really ask. Kind of forgot to, but I didn't really get any suggestions for this week's webinar. But if there's anything you guys want to go over, any questions, any examples, we could look at it. We have about 40 minutes. And while some of you guys come up with topic ideas and questions, I did want to go over the economic calendar for this week, just so we can get a glimpse of what the market will look like. So let me change windows here. All right, so going into this week, here is how it looks for me and my trading. We don't really have any heavy hitters like CPI, FOMC, or anything like that. Monday, no news Monday. Okay, for those who've been with me for a while, I do not trade no news Monday. Chances are that day is going to be trash. That's going to be a free stream, free tape reading. We're going to have everybody in here. That's going to be fun. So no trading on Monday. Tuesday, okay, trading the AM session, maybe the PM session. Same thing with Wednesday. Try to get done by that morning session. Pretty much Thursday, Friday, same thing. Trading the morning, and if we don't get anything in the morning session, we'll show up for the PM. If we don't get anything in the PM session, then we'll try to find a setup in that final hour of trading using what we learned here. So that's how it's looking for this week. Trading every day except for Monday. We got a busy week. So let me guys switch back. We're getting closer to August too, which supposedly is a terrible month. So I'm keeping an eye out for that. Breakaway gaps and normal fair value gaps for entries. We can go over that. I feel like I've been covering breakaway gaps for a long time, but we can do that. let's look at breakaway gaps that formed this week. Last webinar, field codes, if you haven't watched the last webinar, we went over breakaway gaps in detail. But let's look at some examples that formed. We'll look at the AM and the PM session. Handling emotions, being disciplined. Oh yeah, we could talk about that towards the end. We'll wrap it up with psychology. All right, so we have the PM and AM silver bullet hours here. And we're just gonna, literally I'm gonna go on the fly, because breakaway gaps, they're pretty easy to see once you understand the logic behind it. So we're just gonna find breakaway gaps examples on the fly. Right away, I already see a couple here. Go full screen. So breakaway gaps, okay. Ideally, you want to see them stay open, but it's acceptable. Okay, if you're trading like a lower fair value gap here, your stop loss has to allow for price to trade up to at least the lower half of this fair value gap here. So how I view it, just to make sure I'm a part of the trade, I like to get my fair value gap entry in the lower half, but allow my stop loss to be just above consequent encroachment. Okay, most times price will just work that lower fair value gap and sell lower. Okay, but it may want to stab just a couple ticks into this upper one and then sell off. So if you want to be demanding and just trade the breakaway gap and try to get the best case scenario fill, that's fine. But I just like to get involved in the market, and if I take a little bit of drawdown, a little bit of heat, that's fine, because I understand that it shouldn't trade above the upper half of this fair value gap. Okay, I also had this here. This happens all the time. This is your entry. This is your breakaway gap. Okay, we consolidate here, going sideways. We rally up, kind of going sideways, and then boom, get some displacement, and then we get the second fair value gap down here. Always try to get your entry in that lower fair value gap, expecting this one to stay open. So if you're trading this, it will look something like this. Entry right at the low, and then I would take consequent encroachment. Midpoint of the fair value gap here, my stop loss would be just above it, looking like that. Target your sell side objectives. All right. Same thing here. Okay. Work higher, break lower. This fair value gap, I prefer to see that stay open. The lower fair value gap here, that's where you want to get your entry. Okay, a lot of people wait for optimal trade entry, or they wait for price to come back to equilibrium or premium. They'll look for this entry up here. That's not likely to happen. Get your entry down here. Let's go to another session. This was just selling off. All right, so right here, breakaway gap. Okay, we rally up, clearing the buy side. We hang around for about 3 or 4 minutes. Displacement, fast, energetic. Okay, in my trades and in the live streams, you'll always hear me say, I want to see this fair value gap stay open, or at least the upper half. It's a breakaway gap. You don't want to see us break down with a lot of speed, a lot of momentum, just to trade all the way back up. Okay, that's not really bearish. So we just work it by a few ticks, and then we sell off. This day was nasty. What was this, Wednesday? It was choppy. What if you have like 3 or 4 fair value gaps? If you have that many fair value gaps, you probably need to go up a time frame. You need to go up a time frame, or there needs to be some other supporting factors. Someone's talking in the background. Is it? Who's talking? Everybody. It says everybody's muted. I don't know who it is. I don't know. I'm not sure. I think everybody's muted. But if you're not muted, if you can mute yourself, so that way we don't have any difficulties. It's fine. Okay, cool. So yeah, if you have multiple fair value gaps, like there's an example, and I actually missed this looking at it in real time. This right here. So we have multiple fair value gaps here. we have 1, 2, 3, 4 fair value gaps all down here. How do you know it's going to reverse from this one? Well, chances are you probably need to zoom out a time frame, because on the 1 minute, okay, of course you have multiple fair value gaps, but if you go to like a 5-minute chart, okay, it's just one. So if you're comfortable trading the higher time frame, okay, that's your fair value gap. You also have this bullish or bearish order block, 3 consecutive up close candles here. Price retracing into that. But something I missed, and I didn't have this on my chart in the live streams, you have to have other supporting factors. New day opening gap. Okay, this is a daily chart. This candle's closed. That candle's open. This is why I say new day opening gaps and new week opening gaps are so important to have on your chart. All right, look at this. Right there. Had I had this on my chart, I would have loved to short this fair value gap. This is after 11 o'clock, but seeing that, and I believe we're still looking for lower prices, but new day opening gap being used as support here. Okay, we work above it, break below it, we're coming back up. Now, if we have the new day opening gap laying on top of this fair value gap here, automatically, I don't want to see these traded to. Okay, it makes no sense, because we'll be violating this new day opening gap. If we're expecting lower prices, we don't want to see us trade up into here, or these consecutive up close candles, bearish order block. I don't want to see that traded to at all, because there's no reason to. New day opening gap laying right on top of the fair value gap. You want to see that offer resistance. We break lower. Fair value gap, beautiful entry, bearish order block, and then you see the result. So if you have multiple fair value gaps, you need to have either go up a time frame, okay, like a 5-minute chart. It's a lot cleaner. It's just one fair value gap trading up into it, selling off, and have other things on your chart from other time frames. So in this instance, in this example, it was a new day opening gap. That's beautiful. In this case, would you measure the consequent encroachment, or OTE? I don't really use OTE anymore. I just look at price action. I feel like the optimal trade entry model that's like ICT's. That's like the model if you're not really versed in reading price action. Like you're not comfortable with breakaway gaps. You don't really know, how far price will trace. You don't know when fair value gaps will stay open. That's when optimal trade entry comes in, because it's simply take a price swing, wait for it to come back, sell off. But if you're going to trade that way, then you have to understand you're going to miss a lot of moves, which is what I did in the past. But if you understand new day opening gaps, if you understand breakaway gaps, you'll be able to participate in moves like this. But I would wait. I probably wouldn't be comfortable entering this fair value gap. I'll wait for signs of displacement. I want the market to show me that we're going lower, and we get that here, supporting or using the new day opening gap as resistance, leaving these fair value gaps open. No need to trade up there. Okay, and we break down, creating a fair value gap. That's your short. But that's after 11 o'clock, so I wouldn't have taken that. Can you give us your strategy to get tests for a funded account? A lot of people ask for my strategy, but I mean, it's not like a clear cut, like step 1, step 2, step 3. Like if you're in the live streams, like my setups look different every day. I don't just have a set, you know what I mean? Like a lot of people in their trading plans, they'll say, okay, I'm looking for liquidity to be taken, market structure shift, fair value gap breaker. That's my model. Like I don't really trade the same trades twice. You know what I mean? It's really just I'm taking a fair value gap or a volume imbalance entry, and I'm targeting a premium or discount, liquidity pool, or inefficiency. Or maybe like yesterday's trade, like I entered with the bullish order block. I didn't enter with the fair value gap. I entered as soon as price crossed that down close candle, and I used that to get in the market. So Abdil, my recommendation is just like focus on learning how to read price, because if you know how to do that, then you're gonna be set. One thing I learned, you can't trade someone else's strategy. Absolutely. But I'm not really big on strategies anyway. Like you can have a model, that's fine. You have to have a strong foundation in reading price action, because once you understand how to read price action, you understand breakaway gaps, you understand the economic calendar, you know which days are likely to be choppy. If you understand that, you understand liquidity, times of day, then you're gonna find out like you don't really need a specific defined model. You're just going to trade what's in the chart and what makes sense. And to me, I think that's one of the best ways to trade. You're more flexible. Risk management and how long did it take to be consistent? We're going to answer those questions towards the end. I'm not going to forget, but I want to focus on some stuff in the charts here. Let's look at a few more breakaway gap examples, and then I'll get to y'all's questions, I promise. I want to focus on some technical stuff here. Oh, my fault, Andy. I didn't see that question. What 15-minute fair value gap would be high probability and low probability? Yeah, I've seen some of your trades, Andy. Like, you have good trade ideas, but a lot of the fair value gaps you try to enter are like breakaway gaps. So pretty much like what we already covered. Like the same thing we talk about breakaway gaps on the 1 minute chart can be applied to the 5 and 15. So like, though, when you went on that stretch, like, you're missing out on like 2 or 3 setups, and it'll run in the direction you had, like it'll go to your target, but you wouldn't be in the trade. Yeah, it's just breakaway gaps. And that's kind of like one of the downsides of trading the 5 minute, because if the 5 minute chart has a breakaway gap, like the 5 minute chart doesn't create too many fair value gaps between 10 o'clock and 11 o'clock because it's a higher time frame. There may be like 1 to 3 fair value gaps that form in the direction of your bias. And if that's a breakaway gap, it's not going to come back down and give you an entry. But if you trade the 1 minute and you understand, okay, there's a breakaway gap on the 5 minute just below me, I'm not expecting that to be traded to, then you could drop down to like a 1 minute chart and trade something, that you see in the chart. But yeah, that's how I view it. But yeah, a lot of your trades I've seen, you've been trying to enter in fair value gaps that are breakaway gaps. Now, if you get that fill, that's going to be like a no drawdown entry, because if we do trade down in breakaway gaps, it's going to be by like a couple of ticks, and then it's going to take off. But that's kind of like the best case scenario. Breakaway gaps here, and we took this trade in the PM session live stream, but we cleared the sell side. Okay, notice how much momentum we get. A lot of people, we're talking about this in the chat room, but a lot of people are waiting to buy this fair value gap. I even had a buy limit here. But once you see this much speed, first of all, we're not expecting this fair value gap to get traded to at all. I'm actually going to post this trade on Instagram later today, but don't want to see that traded to. We get this large momentum here. See how aggressive and strong this is? Okay, you just have to kind of get a read for order flow. Look how bullish we are. We're closing right at the high. If you're bullish and you're expecting buy side to be ran out here or up here, which is what we were targeting, think about it. Would you really want to see price show this much strength just to come all the way back down to this inefficiency? That's not bullish. Okay, that's not as strong as you thought it was. I want to see all this stay open. Now, if we leave these open and still start to move away, then I'm like, oh yeah, we got a killer. We got a fire trade. Okay, this fair value gap here on top of the breaker. Okay, that's where you want to get your entry. And notice how we also have supporting factors as to why this fair value gap should stay open. In order to trade down to this lower fair value gap here, we have to completely trade through the breaker. If we're bullish, okay, and we're expecting higher prices, do we want to see bullish breakers be violated? No. You want to see those offer support. So it makes no sense now to trade down to this fair value gap. Definitely don't want to see this one traded to, because we have the breaker right here. Okay, so that's why I say I want to see this stay open. This is what I want to see offer support. We have the breaker on top. So you have to have logic, understanding PD arrays, understanding bias. It helps. What's up, 20? You have a question? I don't think he knows he's muted. I'm gonna go ahead. Okay, he did it for me. Let's look at one more example. Okay, here, perfect. Breakaway gap. Okay, if you're looking for optimal trade entry, you're gonna miss out. If you're waiting for price to come back to a premium, you're gonna miss out. A lot of people do something like this, and I used to too. This used to be my model. Okay, up close candles, bearish order block. But notice what we're doing. Okay, you have narrative. Consolidating, going down, going up, going down, going up, and then boom, we break away. I don't want to see this fair value gap traded to. That's a breakaway gap. So a lot of people would do this. And there's nothing wrong with this, but just understand you're going to miss out on moves. This is why I always say understand how to read price action first, and then you're really not going to need a model. You'll just be trading what's in the chart. Don't expect price to come back up to the 62 to 79% retracement. Okay, this is your optimal trade entry. If we understand that this is a breakaway gap, you don't want to see that happen. So instead, if you understand breakaway gaps and you know how to read price, your entry would look something like this. Okay, you would get your entry in this lower fair value gap, and then what are the rules? Allow for price to trade up into this one here. Ideally, you want to see this stay open, this entire fair value gap here. But price may want to come trade up a couple ticks and then rotate lower. So you can't hug your stop, okay, and be super aggressive. If you're fine with that, if you're fine with getting stopped out, possibly, but having like a sniper entry and really good risk to reward, then you can do that. But me personally, I'll take a little bit of drawdown, a little bit of heat, just to make sure, you know, I don't get stopped out prematurely. So put your stop above midpoint. Boom, there's your fill. And then steak dinner, textbook. Okay, this whole fair value gap stayed open. That's the logic behind it. That's why I like to trade the 15-minute. I might get an entry every single day, but when I do, it's no drawdown. Yeah, you could definitely get some sniper entries for sure. On the 1 minute chart, it could be a little bit more because there's just way more fair value gaps. So the chances of you getting in a trade and taking on a little bit of drawdown, it's a little more likely. But yeah, nothing wrong with trading the higher time frame. All right, let's go back. Risk management. So, oh, this is huge. Risk management, man. This is, I saved this PDF from, or the screenshot from ICT, and I sent it in the group chat. This is how I manage my risk. And I definitely recommend doing it this way. If you're still working your way towards profitability, this is what I would do. All right. This was from a screenshot I took from one of ICT's videos in, I think it was his core content, or maybe it was in the Market Maker series, one of those. But just take a look at this. Now, the rules are everybody goes through losing streaks, okay? It's important to understand that an 8-trade losing streak is not unreasonable, okay? I don't care how good of a trader you are. The likelihood of you going on an 8-trade losing streak, like, that's open to everybody, okay? Nobody's exempt from that. I think maybe like 3 weeks ago, I went on like a 5-trade losing streak, okay? It happens. There's a period in the markets where you're not going to be on point. So how do you control your risk? Take a look at this. Assuming these are examples of two different traders. So this is trader 1, the gambler, and this is trader 2, somebody who knows how to manage their money. Before we get into this, the rules are if you take a loss, okay, let's say it's a fresh week, okay, going into Monday, right, next week. If your first trade is a loss, your second trade, you need to cut your risk in half, all right? So if you're risking $100, we're just going to go with this example actually. If you're risking $200 and you take a loss, your second trade, you need to risk $100, okay? You need to cut your risk in half. If you lose that trade, if you lose that second trade risking $100, you need to cut your risk in half again, and now you're only risking $50, all right? And you keep risking $50. You stay at $50. If you keep losing, you stay risking $50. Now, when do you go back to risking $100? When you make back what you lost on that second trade, I believe. Those are the rules. So if you lost $100 on your second trade, you're risking $50 until you make $100 back. Once you make that 100, then you can risk 100 a trade. And then if you lose that 100 again, you drop back down to 50. Those are the rules. But let's look at the numbers. Trader 1, the gambler, okay, loses 8 trades in a row. But what does he do? He keeps his risk at $200. Okay, he doesn't cut his risk in half. He just stays at 2% risk, which is 200. Takes a loss, take a loss, take a loss. By the time he loses 8 trades in a row, he's lost 13%. 13%. Trader 2, somebody who's great at risk management. Same thing as Trader 1, loses 8 times in a row, but he cut his risk in half after the first trade, Second trade, he lost again, so he cut his risk in half again, and he stays risking $50 until he gets that $100 back. After 8 losing trades, he's only down 5%. It's really hard to blow an FTMO challenge, a Top Step challenge, whatever it is, your personal funds. If you handle risk like this, now it's not sexy, it's boring. Like, nobody likes risking a quarter of 1%, 0.25%. Like, that's not fun. But we focus too much on the profits, the potential, the past challenges, getting funded, like how much money we can make. We focus way too much on that, and we don't consider the risk. We don't consider the possibility of us losing 3 trades in a row, 4 trades in a row, 5, 6, 7, 8 trades in a row. We don't think about that until it actually happens. Once you hit that second trade loss, that third trade loss, then it's like, oh, wait a minute, my equity is dropping, and it's dropping fast. But if you have this approach, 8 losing trades and you're only down 5%. That's awesome. So as far as risk management, incorporate this into your trading. If you take a loss, cut your risk in half. If you lose again, cut your risk in half and stay there until you get back what you lost on that second trade. Those are the rules. Good question. Good question. Really hard to blow an account when you could lose 8 trades and only be down 5%. It's not sexy. It's going to take time to get out that drawdown, but you're still going to have equity at the end of the day instead of a blown account. Whoops, wrong screen. All right. How long did it take for you to become consistent? So I started trading Forex like back in, I don't even know, what was that, like 2020, 2021, but I didn't find ICT till like 2022, but I really didn't take ICT like serious until he started that 2023 mentorship playlist. Like at the end of 2022, he was going off on Twitter talking about how like if you like listen to me in 2023, like you're gonna get what you're looking for. I don't know if y'all was on Twitter at that time, but he was in a Twitter Spaces saying like, you know, just follow me, like stick it out all of 2023, and I promise you by the end of 2023 you're gonna be where you want to be. And I was like, you know what, that's a good enough sales pitch for me. So went to the store, got a notebook, a pencil, color pencils. I was like, I'm gonna take notes on every single video he drops, and I'm just gonna go crazy all 2023 and just study. So around September, October of 2023, like I got to a point where I was like, okay, like I don't really need to keep up with the mentorship anymore. Even if he posts going into November, December, like it was just getting repetitive. I knew what he was going to say before he pointed out in the charts. Like I felt like my understanding of price action just grew a ton. So yeah, I'll say about a year to a year and a half. That's how long I've been studying ICT, and that's how long it took me to become consistent. But go on your, don't, like, it's not like that. Some people, it takes longer. Some people, they may get there quicker. So don't compare yourself to me or anybody else. But from my studying and the efforts and all that I put in, it took me about a year and a half before I finally got consistent and knowing how to read price action. But don't compare yourself. Go at your own pace. It's not a rush. Let me read the chat, make sure I didn't miss anything. What time is it? Okay, we have 15 minutes. 2023 mentorship, yep. In my opinion, that's the best playlist for anybody who's struggling or working towards profitability. People will have different viewpoints on it, but this is the order I recommend studying ICT, and this is my opinion because this is what I did. The goal in trading is to understand how to read price action. You need to know how to read price action. How do you identify the drawn liquidity? How do you know where price is going? You need to have the skill set of reading price action. So if that's the goal, if that's the focus, I need a playlist that teaches me how to do that. That's the 2023 mentorship. Why? Literally in that 2023 mentorship, ICT, every day, every week, he walks you down. He literally holds your hand through the process from a weekly chart down to a daily chart, 15-minute chart, 5-minute chart, 1-minute chart, and he's teaching you bias, he's teaching you narrative, he's teaching you different PD arrays in there, and he's literally going the whole year walking you through price action. He walks you through moments when the year is choppy. He tells you like which days are likely to be low probability. On the days of like FOMC and NFP Thursday, like all of those days are in the 2023 mentorship, and he's telling you these are days at low probability. These are days you don't want to trade. This is the best day to trade. Here's how to use the economic calendar. There's trade example. All of that is in the 2023 playlist. You go through that playlist, you take notes, and you mark up your own charts. In my opinion, once you're done, you're going to have a really good understanding of how to reprice. Step 2, you need a model, okay? You have the silver bullet model. You have the optimal trade entry. You have model 2022, whatever it is. Some kind of way to get into a trade, whether it's a fair value gap. My model is pretty much the silver bullet. I look for a fair value gap or volume imbalance between 10 o'clock and 11 o'clock, and I'm targeting liquidity or I'm targeting some kind of inefficiency, okay? We're in the live streams, that's all I do. I'm targeting buy side, targeting sell side, or a fair value gap, and 9 times out of 10, I'm entering with a fair value gap. And that's it. Learn how to reprice, pick a model. That's it. It'll take some time, but like once you have the skill set, shoot, open up a YouTube channel, open up a Discord, and teach other people, share your story, how you did it. But we have about 13 minutes. We'll take one more suggestion, anything you want to cover in the charts, anything technical or outside of the charts. We're here to get better, so it's up to y'all. And I appreciate y'all's dedication too, showing up on a Saturday. I don't know how, for me, it's about, right now, it's 9:47 a.m. I don't know how many people are taking time out of their Saturdays to, study, tune into a webinar, and prepare for the weekend. So hats off to you guys. We could still be sleeping in, depending on where you are in the world, but you could still be in bed. You could be out doing whatever. But we're in a Discord trying to get better so we could kill the week. Love it. It's going to pay off, man. It's going to pay off. It'll show. Your friends, family, and all that, they don't see you, tuning in to a webinar, learning about breakaway gaps and market structure and liquidity and all that, but it'll show. Just like last year in 2023 when I was studying the 2023 mentorship, and I was up late nights taking notes, in my room with my lamp on, watching ICT videos that are 4 hours long. Nobody saw that part. But as soon as I opened up my YouTube channel, opened up the Discord, now everybody's seeing, the fruits of the labor. So same thing's going to happen for you guys. I know some of y'all are already profitable, which is awesome, but for those who are still working towards that, the work's going to show. The work is going to show. It always does. What's done in dark will come to light. Just keep working. I really appreciate the effort, work you put in Discord, actually help us become a profitable trader. Yeah, no problem, Andy. That means a lot, bro. I appreciate that. I've been to other Discords. I was in, I still follow him, Doyle Exchange. He's a great YouTuber. I'm subscribed to him. I was in his Discord, and it was $50 a month, and it was cool. But I feel like some things are missing most Discord. I feel like most Discord communities, it's just kind of selling. They're selling. They're selling stuff. But I don't know. I don't brag on myself too much, but when I look around the YouTube community, as far as value goes, I don't have the most subscribers. I don't have the biggest fan base or whatever. But as far as the quality, put it out there, and the actual genuine, I actually like helping people. I actually love opening my charts and going over stuff and answering questions. I love it. So, and at $20 a month, we're traders. That's literally the cost of a spread or commission. I'm not finna charge y'all $100 a month for a Discord subscription. If you can trade, you don't need to charge people an arm and a leg just for a Discord subscription. Am I a full-time trader? We talked about that in the live stream. I'll get back to that question. It's complicated. Can you have an example where market structure shift is stronger versus a fake out? I'm gonna work on my break. Market structure shift versus stronger. Jesus, I'll do that later. I'll do that. That's gonna take a little bit more time, and I have to have examples ready. But I'm not gonna forget. I got you. I'm gonna make a note of that, and maybe I'll put like a small little 2-minute video together, and I'll share it in the chat room. But I got you. Man, the best actually care. Yeah, I love our community. I feel like we have one of the best Discord communities. Best Discord community. Like Shy, she said like she left all the other Discord groups because it was just a bunch of egos, like a whole bunch of egos. People are trying to prove they're better than one another. It's like, bro, we're traders. We're trying to make money. We don't got time to be trying to one up the next person. Which is why like the what is it, like when you open up my Discord to join for the first time, and it has that little sentence about what the Discord is about, kind of like the topic. Like it says, this Discord is focused on learning and growing as traders. We lift each other up and we make money together. Like that's the theme of this Discord. Like we don't got time to be arguing and trying to prove we're a better trader than this person or that person. Like we all just trying to quit our jobs and do this for a living. Most people. We'll stay on for about, we still got 10 minutes. We got some time. You're doing a great job. I'm not profitable yet, but I've been working my ass off last 2 years. That's all it takes. That's all it takes. Like some people it takes a year to get profitable. Some people it takes 3, 4. Some people it takes 10 years. But just remember, like as soon as you have this step, like, or as soon as you understand how to reprice and you have the skill set, you're done. You don't ever have to watch another ICT video. It's like riding a bike. You don't have to study. You don't ever have to back test. I think it's smart to do those things so you can stay sharp. Like on the weekends, I don't back test nearly as much as I used to. But on the weekends, I open up the charts for maybe 30 minutes. You know, see what happened, what did I miss. When I do market reviews, that's kind of like my way to back test. But yeah, keep it up, Phil Coast. Keep it up. There's a question I skipped over. Oh, full-time trader. So I went over this in the live stream, I think a couple of days ago. Technically, by definition, you could say I'm a full-time trader, but I'm not giving myself that label yet. Because I was working maybe like 3 months ago, and then I got fired. So I got fired from my job, but the job wasn't paying like that. Like it wasn't no like, you know what I mean, upper level job or anything. And the money I was making from that job, I was making trading my personal account, okay, with TradeStation, because I have 5 figures in that account. So I got fired from my job, and I was like, okay, I have 2 choices. I can look for something else, or I can just trade and live off of that. And obviously I have like revenue, YouTube, Discord, and some other things. So it's not just trading is my only source of income, but it's a big chunk of it. So I'm kind of in a position where, yes, I'm just trading right now, but I may go find another job. And if I do, it's going to be overnight because I like trading the PM session too. So if I get like an overnight thing, I may do that. Or I may just say, you know what? I'm just going to write it out, build equity, and just keep it rolling, trading full time. So, but in my opinion, nobody should be a full-time trader, unless you have like an emergency fund saved up, like at least 20,000 in like emergency funds. And then obviously you have to build up. I don't think anybody should live off of prop firms. You should not be a full-time trader off a prop firm. Like if you're relying on Top Step and all that, and you're a full-time trader, that's in my opinion the dumbest thing you can do. We've seen what happened with my frozen funds when they got shut down. And then Top Step, like they take a pay cut, and there's rules like you should not be a full-time trader with a funded account. Build your own personal account. So I'm not working right now. I'm just trading, but I don't want the title of a full-time trader yet until I have like upper 5 figures in a personal funds saved up and all that stuff. So I'm not quick to call myself a full-time trader. I'm going to hold off on that title, but by definition, you could take that for what it is. I'm working with y'all. Yeah, no problem. Definitely not trying to go back to a job, though. I said I'll quit my job until I save up at least. Yeah, that's exactly. In my opinion, like that's a good number to have. Like I don't think anybody should really become a full-time trader unless you have like 50K. You have to have like an emergency fund saved up, and you have to have a good amount in your personal trading account, and obviously your expenses. So like if you have kids and all that, like you just have to calculate your monthly expenses, debt, and all that. Like, I don't have no kids. It's literally just me. I don't have a lot of bills. I'm not in school right now. So I really just, like, you know what I mean? It's the numbers are different for everybody. You have to do that on your own. Do you trade micros? Yeah, I trade micros on my personal. I may, when my account size gets a little bigger, I may start trading one mini contract on my personal. But most times I risk about $100 to $150 on my personal account, and I'll aim for about $250 to $350 a day. So about $200 to $300 a day is what I aim for my personal account. But if I get like $500 a week, I'm like cashing out, because that's about $2,000 a month, and I'll deposit that. My goal is to compensate trading with my current construction work. If I can make $300, $700 a week, that would be awesome. I can cut overtime hours. Yeah, no, that's the goal. That's the goal. That's why, like, when I got fired from my job, like, I wasn't really tripping, because I was like, I already knew, okay, if my job pays me this much a week, I was like, shoot, I could just make that trade in my personal account. I would be more stressed if, like, I had a funded account and then I got fired, because, like, damn, like, now my, like, Top Step has more control over my life now. But the fact that, like, I can make money from my personal account, there's no rules or anything. When I got fired, it was like, okay, I'm just going to show up to the morning session tomorrow and make what I make anyway. So it was no big deal. That is like a cut in my income stream, though, because obviously having a job is an income stream, but you just have to adjust and adapt. I don't miss going to work, though, so it's cool. But yeah, man, it's 9:50, or, well, in New York time it's 10:57. Any last questions? This kind of turned into like a psychology discussion, but that's good. That's what we need. But any last questions, requests, closing remarks? We're gonna have a great week in the market, man. It's gonna be a great week. We had a busy week. Monday is the only day I'm not trading, but Tuesday through Friday, AM session, PM session, we get in busy. It's gonna be a great week. Yep, let's go. But we're gonna wrap it up. So free live stream on Monday morning. So we'll be in the tape reading channel on Monday. I'm gonna do the weekly forecast later today, so that way those daily key levels and my bias for different markets, I'm gonna get that posted tonight. And make sure you guys get some rest, man. You took an hour out of your Saturday to send this webinar, gain a little bit of knowledge going into next week. But use some of today or some of tomorrow. Get your rest. Spend some time with friends, family. Always encourage getting away from the charts a little bit, because we're so focused on trading throughout the week, Monday through Friday. You need the weekend to kind of just unwind. All right, you don't want to get burned out. So it's gonna be fun. Come back trading live the PM session. Nah, I'm really focused on not trading Monday at all. I might update my trading plan, honestly. Mondays have just been, for the most part, trash. So even PM session, last hour macro, I don't think I'll touch it on Monday. Oh, during the week? Yeah. If I take a loss in the morning session during Tuesday through Friday, then I'll be trading the PM session. I only take 2 trades a day. That last time I took 3 trades a day, I only took 3 trades because that first one was a break even. But I only take 2 trades a day. If I still have bullets left in the chamber by the PM session or the AM or the final hour macro, then yeah, it just depends. Most times I just want to be done by the AM session. I really don't like trading the PM or the final hour. I like doing stuff with my day, but we gotta make money, so it depends. I'll be live. Yep, live streaming PM session, final hour macro, all that will be live. All right, y'all have a great weekend though, man. Keep an eye out for the weekly forecast. Get some rest. I'll see you all in the free live stream tape reading Monday morning at 9:30. All right, love y'all. Be safe. Peace.